Awesome. So I'm super pumped for these calls. I love these calls. I love the legal compliance component. You guys can be experts at raising money, expert at doing deals, but if you really want to be a great fund manager, you really have to know the legal and compliance piece of it. So it is really the nuts and bolts of putting together a fund. You really have to have a foundational understanding of what you can or cannot do before moving forward, or else you're going to get in trouble. That's the crux of it. So my name is Ryan Werking. I am fourth generation oil and gas. I own an engineering firm. I'm involved in quite a few different various oil and gas ventures. I've raised money through Reg CF, Reg D, and Reg A plus. Marty, who's on the call, we actually put together the first oil and gas Reg A plus ever together. I passed my Series 65 in 3 weeks. And at one point, I was one of the youngest chief compliance officers in the country for an SEC RA. So we have some awesome guest speakers here today. Rob is on here and Marty is on here. Rob is the CEO of Netcapital. How long have we known each other, Rob? It's going on a few years now.
Yeah, I honestly, it's so hard to figure out these days if it's either been like a year and a half or like 10 years, something in between those two. I think it was 3 or 4 years ago we met.
Yeah, man. So he knows everything there is to know about Reg CF and how to have a successful raise. And Marty, for those of you that don't know, he's my go-to SEC attorney. He set up Bridger's dad's first funds. He's worked with Grant Cardone. He's set up hundreds of domestic and offshore funds. He actually co-authored the 2012 Jobs Act that basically created crowdfunding. So the topic of this call is raising money from non-accredited investors. And this is what's primarily done through two different regulations, Regulation CF and Regulation A+. The SEC has different definitions for investors. There's accredited investors, there's qualified clients, there's qualified purchasers, but we're talking about your everyday folks that are not considered wealthy, I guess, right? They're non-accredited. So let's just hop into we're going to start this call with Rob and Reg CF and how that works. And Marty, please chime in on the regulatory stuff if you have anything to add. But yeah, so let's just hop into it. So yeah, Rob is the CEO of a registered funding portal, Netcapital. And Rob, how many offerings have you guys done through Netcapital?
Yeah, thanks, Ryan, and thanks for having me. We've done over 250 offerings at this point on Netcapital over the last 5-ish years or so. So we're right in the thick of it now.
Awesome. So, Rob, how much can you raise in Reg CF?
Yeah, it's a good question. So the maximum under regulation crowdfunding would be 5 million. There are also some lower tiers. One that they recently got updated. One's at about 1.25 million, and one's at about 125,000. And those entrepreneurs can take advantage of with lower disclosure requirements, mostly around their financial statements. Okay,
so let me lay the groundwork for you, Rob. This group, everybody here pays about 30 grand a year to be in this group. Everybody's an emerging fund manager, right? We're aiming for the stars. I think everybody hits that $5 million mark. So for the purpose of this call, let's aim for what's required for that 5 million mark.
Sounds good.
So can you raise money for a fund in Reg CF?
So the short answer is no. Reg CF, as it was designed through the Jobs Act, and it was designed to kind of help entrepreneurs, make sure that entrepreneurs had access to capital, could hire people, things like that. So there are restrictions around kind of funds and things like that. It does have to be for operating entities. It can't be for companies that its only job is to hold securities. That being said, I have seen some novel constructions around using Reg CF to fund kind of operating businesses that are operating funds. It gets a little convoluted. I'm not sure kind of the efficacy of that kind of thing, but it certainly can be used as a complement to a fund or as a tool for a fund manager to help their portfolio of companies and investments.
Awesome. Great. So what would you say is like the best application for a Reg CF offering? I kind of think of a venture capital, startup, seed funding, but I don't know, what would you say is the best application for Reg CF?
Yeah, there's the cool thing we've discovered over the years is that there's a couple, probably what I would call 3 or 4 kind of really strong use cases for Reg CF. The first being, it's a great opportunity for entrepreneurs to raise a first round of funding. So being the first money into a company, that's typically a friends and family round where you don't have to worry about, whether your friends or family are accredited or they sign all the correct paperwork or things like that. Safe Harbor works really well for those types of financings. But we're also discovering that it's working really well for later stage companies. And it can work well for, I'll call 2 big buckets of companies. The first is companies that have, let's call them fans, right? Now that could be something like, it could be an amateur sports team or a minor league sports team, or it could be, we've got one of our most successful companies was a company called MagFast that does kind of basically high-end chargers for phones and other electronic devices, and they kind of go very nice and high-end. And they've just developed a really great brand over the years. They've got kind of over 100,000 people on their email list, and they're really good at engaging those people and sending an email and saying, come invest in us. And they make kind of money rain from the sky through their email list. And it's pretty incredible.
Rob, what's
Yeah,
their minimum investment for MagFast?
$100.
$100. And how many investors came through that? How many investors roughly did they have?
Yeah, they raised 3 times with us for a total of about a little over $7 million. And I believe they had somewhere in the order of about 4,000 to 5,000 investors.
Incredible. So how does that work on like the cap table? That seems like in most cases that would be very messy. But I remember something very awesome with your guys' structure. It kept the cap table pretty clean. Can you explain how that works?
You're setting me up well, Ryan. Thanks. So obviously, when we came into this business, we knew that having 5,000 investors on your cap table would be untenable for basically any entrepreneur. So what we've done is we created a structure through our technology, an SEC registered transfer agent, and a custodian. And so I'll spare everyone the details, but essentially, when an investor invests, they become a beneficial owner of the securities, not the record owner. And that we have a single custodian who becomes the record owner of the securities. And so for the company's purposes, there's one record owner of the shares on the cap table. And then we use our technology and agreements to keep track of everybody else on the back end. So for the majority of our companies, we are the kind of the portal and the voice. So we manage on an ongoing basis for the issuer. And if the issuer wants to communicate or send updates to their investors, they do it through our platform. Every once in a while, we'll have a company that wants to manage those people on their own. They've got the infrastructure and the kind of inclination to do so. In which case, we can help them do that. But most people use us as that intermediary.
Nice. So what would you say like are so let's say with this lens of trying to raise $5 million.
Yeah.
What are the regulatory and like auditing requirements for a capital raise?
Yeah. So when you're doing Reg CF, you file something called the Form C, which is it's about 31 questions of disclosures about the company. The big things, most of the Form C is actually relatively simple. It's about key people in the business, history of funding, talking about use of proceeds, things like that. So all pretty manageable stuff. Most entrepreneurs can get it done in a day or two, or at least the first draft. And we use technology to let them input it all in a quick kind of QuickBooks style entry system, so they can just put all their information in and we generate all the documents. The heavy lift for most entrepreneurs is you need audited financial statements for the last 2 fiscal years. As I mentioned earlier, which we won't mention again, is there are some kind of lower levels there, but if you want to raise 5 million, you need audited financial statements. We've got some partners who can do that relatively cheaply and easily, but for some entrepreneurs, that's a pretty hefty hurdle.
Right. So let's say you're a new company. There's no, you barely have bank accounts. Okay. So
Yeah.
there's like, it's like a pretty simple audit. How long does it take to get, to launch on Netcapital, roughly?
Yeah. So, roughly 2 months is what we typically say. We can do it. We've done it in as quick as 5 business days for companies that had their financials in hand. But typically companies take about 2 months to prepare for their fundraise, between getting everything ready to go, getting their finances audited, preparing for the fundraise. One thing entrepreneurs can make the mistake of is they rush through all the compliance work and they get live, and then they realize they didn't actually make a plan for fundraising. And the internet's wonderful and our platform is pretty great, I think, but it doesn't make money rain from the sky. So you do actually have to kind of like plan and prepare for your fundraise, and so some entrepreneurs kind of skip that step.
Yeah, it's not one of those if you build it, they will come
Yeah, no,
situations.
this is not Field of Dreams, unfortunately. I wish it was.
Right. So, uh, one, can you give an example? So you gave an example of MagFast. Can you
Yeah.
just line out what exactly they did so well to have a successful raise? I guess my key question is, what makes a successful raise?
Yeah, it's a really good question. So the first thing, right, is simply preparing. I talk to entrepreneurs all day, every day, and the number of them who kind of refuse to prepare are it's a little shocking. But I'm sure you all know that as fund managers or emerging fund managers, you talk to entrepreneurs too, and sometimes they've got ideas. It's wonderful. I love working with them, but you try to be you love the coachable ones. I think of kind of two archetypal successful types of companies who are raising through Reg CF. So the first type is I already have a community, I just need to engage them. So a business that's been around a while, that has a list. To raise 5 million bucks, you probably roughly need about 5,000 people to invest. So you probably need lists in the tens of thousands to be able to kind of do it all on your own. But once you have that list and you can create engagement, it can be really, really exciting. So what MagFast does, for example, is they do big buildups. So they say, hey, something big is coming. And then they host a big event and they really email their list and they get everyone to sign up. And then they do a big launch and a big opening. And they really use it as a tool to get people excited and ordering their products and investing and doing all kinds of really cool stuff. So that's kind of the one bucket, right? And they're obviously like they're the shining gold star, but there's a lot of lesser versions of that.
Right.
The other version is a company that's a strong business, but doesn't have necessarily a huge group of fans, but they want to get out there. So we had a great company called Energy X. They're doing a bunch of amazing stuff in kind of lithium extraction and new battery technology. And they've got a very charismatic CEO. And they used their Reg CF as an opportunity they believe they raised like $5.5 million with us over a couple of rounds. And they used this opportunity to, they got mentioned in the BBC and the founder got compared to Elon Musk. They ran digital ads. They kind of used it as a platform to then do a full court press to introduce themselves to the world. And the result was that they were able to drive a lot of investment. So, they spent a lot of money on that. It wasn't just dollars in, no dollars out. It was but they saw it as an investment in their business in the long run, not only to bring in investment dollars, but to bring time and attention and interested investors.
Nice. All right. Well, thanks, Rob. So I wanted to bring up this topic, guys, of raising money from non-accredited investors because through Reg CF and Reg A plus, because the truth is a lot of people come into Black Card and realize, you know what, I'm not a fund manager. This is a lot for me. But they have a business or a startup or a venture, and I just want to make sure everybody is aware. So, Rob, did any potential special discounts for this community, maybe?
Yeah, well, and the good news is, if you're a friend of Ryan, you're a friend of mine. So for this community, if anyone wants to work with me, we've got varying pricing depending on size of the business, how much you're raising, things like that. So I won't give a blanket discount here, but what I can promise is basically anyone who comes from this network is going to get the absolute best pricing we can give them. And sometimes that means deferring some of the fees to after the fundraise to make it even more affordable, or we have some upfront fees that we can discount, cut down, things like that. I figured that's going to be the best way for me to take care of you guys versus trying to give you like 20% off or whatever, half off, and then being stuck in a formula. So if you
Sure.
come via Ryan, you're going to get the absolute best we can do.
Awesome. Thanks, Rob. I appreciate it. Is there any, before we flip it over to Marty and going into Reg A Plus, is there any questions for Rob?
Ryan, should I put my email just in the chat as well? So if anyone wants to reach out or chat, or I don't want to,
Yeah, that'd be
I don't want to
awesome.
make myself available.
That'd be awesome. Albert, what's going on?
How's it going, man? So question for you. When we're talking about Regulation CF, there's a lot of different stipulations there in terms of the amount of dollars an individual investor can contribute towards your fund. Is that kind of designed into that target number of 5,000 people as an audience for that $5 million raise?
Yeah, great question. So for non-accredited investors, there are limits on how much they can invest to your Reg CF based on their income and net worth. It's all self-reported. We do all of that in our system. That's our job to do as a funding portal. So that's kind of our responsibility in this ecosystem. Most people are allowed to invest much more than $1,000. Where I pull out the $1,000 number from is that I've seen across numerous raises that have raised $1 to $5 million is the average investment size usually ends up at right around $1,000. Even if a company's raising from a lot of little investors, there typically that's kind of where things tend to end up. It's a good rough number.
Awesome. Cool. Well, Rob, thanks, man. Thanks for coming on. I really appreciate it.
Thanks for having me.
Yeah, absolutely. You're welcome to stick around if you want. I know you got a busy schedule.
I'll hang around. No worries.
All right, awesome. Well, hey, now we're gonna flip it over to Marty. Now this is a much more complicated way of raising money than Reg CF from experience, but it's definitely doable, and it's a fun path forward. So, Marty, when did Reg A Plus become a thing? When did it get started?
So Reg A has been around for a long time, but it was really cumbersome and hardly used. I think I had done one Reg A offering, and at least we tried to do it. It ended up being too difficult because the previous Reg A, or I guess that kind of still exists, it's just now called Tier 1 Reg A, required qualification in each state. With the Jobs Act, that was in addition to Regulation CF, there was changes to Reg A where they introduced basically what's called Reg A Plus. And that allowed, the biggest change that made is it allowed you to avoid registering in each state. You just had to, or qualifying in each state, you just had to qualify with the SEC, and that preempted the state qualifications. So it's been around since Reg CF, and has, I think has seen about the same level of acceptance, and it's been used differently, most definitely. But a lot of times what you see is with companies, they'll do a Reg CF. A lot of times they'll do a Reg CF and to raise, initial capital so that they can go out and do a Reg A. And a lot of the same people that, a lot of the same types of companies that have success with Reg CF can then, take that and pour gasoline on the fire and do a Reg A, if they have that. But it's like Rob said, it's a lot of times, I mean, with both of these things, having that built-in network is absolutely essential. It's not just something you put it up on a platform, you put it up on one of these portals or platforms, and people will automatically buy it. So, or we'll just come and find it. Some people do, but that's rare.
So Marty, how much can you raise per year through Reg A plus?
So you can raise under tier 2, that's really all I'll talk about, because tier 1 to me is just not functional. Is you can raise up to 75 million.
Got it. Okay. And so along the lines of Reg CF, can you do a fund? What's the best application for this? Like what's some different structures you've seen for using Reg A plus? Can you do a fund with Reg A plus?
So the initial answer, the Jeopardy answer, I guess, would be is no, you can't, right? So it's not designed for funds. It's designed for operating companies. That being said, and the rule is that basically it can't be for investment companies, and including investment companies that are exempt under 3C1 or 3C7. So those types of companies can't use it. That being said, there are types of funds. There are types of entities which you can use another exemption. For example, what we did with your company with oil and gas. We did an oil and gas fund because that we fell under a different exemption from the Investment Company Act. Real estate is another type of company that has found tremendous success. Real estate companies have found tremendous success and utility in Reg A plus. REITs, real estate investment trusts, have been really popular. So I guess the answer is it depends on the type of asset.
Yeah. So I just put in the chat, guys, there's two companies that have done this fairly well. I think for the REIT structure for Reg A plus, you can look up I actually put this in the Slack channel. But the two companies are Realty Mogul and Fundrise. They have many different successful Reg A plus offerings with the REIT structure, and but it gets complicated. So let's maybe talk into that a little bit, Marty. When you do a REIT structure for a fund structure with Reg A plus, what are the different components that you need to make that operate from a legal standpoint? Do you need an RIA? Do you need your securities licenses? Do you need a transfer agent? How does that work?
So with a real estate fund, generally, like if your asset is real estate, and you're going to go buy real estate, you're not investing in securities, and therefore it's not, the book would say that you don't need to be an RIA or an exempt advisor. However, a lot of those types of entities still will go and either become an exempt reporting advisor or even an RIA. Where it gets a little tricky is if, like for example, if you're investing in debt, if you're buying notes, although the SEC generally takes the position that those real estate secured notes are not securities, there's debate on that, and then there's differing rulings and opinions on that. I know that we had the SEC on one fund that we did was saying that those notes were not securities, and so why were we trying to register that? Then we had state securities commissions that were saying, or departments that were saying those absolutely are. So that's one thing to kind of think about. Having a transfer agent is essential. The biggest reason for that is because if you have a transfer agent, then you are exempt from Section 12G, which is the requirement that if you have over a certain number of investors, that you have to register as a public company. If you have a transfer agent and you sell under Reg A, the investors that you bring in under your Reg A do not count towards that 12G number. So transfer agent is something you should have. An escrow agent isn't essential, but it's recommended. The other party that I would recommend is having a broker dealer. Again, not essential, but recommended, because there are certain states that don't allow you to sell into those states without having a broker dealer or licensing. Or licensing is what's called a issuer dealer, or something to that effect. I can't remember the exact term.
So to recap, the Reg A plus fund structure, you really have to be well funded, have a strong team, and be very disciplined, and it's a lot, because we just mentioned, a transfer agent, potentially escrow agents, broker dealers, an RIA arm for managing the fund, and advisor fees, right? It's quite a bit, but it's a lot. So Marty, how much can we talk about like the regulatory and auditing requirements? Like how often do you have to file with the SEC and report to the SEC?
So one of the big things that we didn't really talk about, and I'll answer that, is that the difference between a Reg CF and a Reg A offering, in addition to, you can raise a lot more. And the reason why is a Reg CF is not reviewed or qualified by the SEC. So you file it, you have to make sure, you want to make sure that everything in there is correct and compliant, but the SEC does not review it. And so you're kind of off to the races. So it's a lot easier and frankly, a lot less expensive. In a Reg A, you file what's called an on-offering circular on Form 1A, and that is a much more extensive document. The disclosures are more
200 pages.
Yeah, I mean, it can be, yeah, right. So it's what you're required to disclose is significantly more. You have to have audited financials. There's not a number qualification that would prohibit that. So, and that document has to be reviewed and qualified by the SEC, and typically they come back with one or several rounds of questions and comments, and then you have to go and you have to respond. You've got to make changes. It's a process, as Ryan knows. Only on a few occasions have I come back and had, no comments, which is always miraculous, I think. So, so that's the initial filing. And then once it's qualified, you're off to the races. You can start selling. But you also have to do, you have to do regular reporting. So you have to file what's called a 1K, which is a annual report, which is due 90 days after the end of the year. And then you have to do a semi-annual report, which is, the annual report has to include audited financials. The semi-annual report does not. But so both of those are required. If you have material changes or updates, you have to file what's called a Form 1U that lets people know the progress. As well as if you make changes along the way, if you change the offering size or the offering price, or officers or directors leave or added, you have to file an amendment that has to be reviewed and requalified by the SEC. So it just takes a lot more work.
So basically you just want really good legal counsel, and when I was doing it, when you throw on the RIA component and dealing with FINRA and all those separate regulations, it's really just too much for one person, right? You have to really, our solution was actually working with Layla Shaver, right? From my RA lawyer, and outsourcing a lot of the compliance work to just manage it because it's so much. So, fantastic. Well, what are some of one of the things I loved about the Reg A Plus, we've talked about regulatory compliance, all the different parties, but one of the best parts is that it's so easy to raise money once you get it all figured out. Literally, you can swipe up on an Instagram ad, and within a couple clicks, you have investors in your fund or in your offering. So it's really frictionless, which makes it really nice, and you can advertise. All right. So Marty, how long roughly does that take to get qualified? What's the time frame? 6 to 8 months or something like that?
So, I'll tell people 3 to 6 months, but it can take longer. Like I said, I've had a couple where we literally had it qualified in 2 months. But that's abnormal. Both of those were for public reporting companies, and I just think that because they had filed, they were filing their 10Ks, and it was the SEC just didn't have a lot to review other than, they had the annual reports and so forth. So yeah, it can take 3 to 6 months is what I would plan on.
Okay. All right. So there's one little section of regulation we haven't talked. We talked about Reg A, Reg CF. We talked about Reg A plus, and then there's some portion of Reg D, which is applicable to most of the folks in this room, where you can raise some money from non-accredited investors. And I think that's Reg D 506B, right, Marty? And you can raise money up to, I think, 35 non-accredited investors through a 506B. Is that accurate?
Correct. Yeah, with proper, financial disclosures.
That was my next question. So what separately do you have to do if you do accept funds from a non-accredited investor through your 506B offering?
So you are required to provide them audited financials. If you don't have audited financials available, then reviewed financials. And if it's a brand new company, then you need to have a really good reason why you didn't. I've only had this issue. The legal requirement is you provide them what's called Form 10 type information, which is basically, IPO type information. You don't see that a lot. But I recommend always providing financials. If you have audited financials, you can provide them. That's the safest bet.
It's easiest just to not accept funds from non-accredited investors.
Yeah.
All right, guys. Well, hey, I think I've covered all the major topics. I want to open up for Q&A. Rob, me, to Marty, any questions on raising funds from non-accredited investors? Kelly, I know you've done. Yeah, Kelly, what's going on?
Yay. I hope I didn't miss it, but I was going to ask, I know that there's like a threshold of where you can raise before you need an audit, maybe. I only say that because I know a couple of people who did like maybe a $50,000 or $100,000 raise and then went in later for more. If they're like just a beginning company, like to not have to go through that whole process. Is that doable? Is that something that makes sense? Or like what's the threshold of amount that you're raising in order to need that audit?
Ryan, you want me to take this one?
That's all you.
Sounds good, Kelly. Thanks for the question. So you can raise up to 1.25 million with reviewed financial statements, which is less than an audit. Doesn't need all the. It's much easier. We see typically startups being able to get a review done in 2 to 3 weeks for typically anywhere from like $1,500 to $3,000. So it's pretty accessible. There is an option to raise just $125,000 with self-certified financial statements. We typically recommend that entrepreneurs do not do that because they inevitably get them wrong. And so when they later on go to get a review or an audit, they end up having to change everything they did before, and it becomes a bit of a mess. So we typically recommend going and getting the review right off the bat. It's an expense, but it's not too bad, and it really sets you up well for being able to do financings in the future.
That's really helpful. Thank you.
No problem.
Marty, I'll let you field this next question. The question in the chat is, how do you go from a Reg D 506B offering to a and you have some non-accredited investors come in, and then you actually convert to a 506C if you wanted to do that in order to advertise? How do you do? Can you do that? And if you can, how do you do it?
You can. I think you just need to kind of make sure you close out that 506B, that you don't have any general, advertising. You close it out, and then once you start your 506C, you used to have kind of this sort of cooling off period, but it's easier to go from a 506B to a 506C because you can basically say, great, we're not going to accept any more non-accredited investors, and we're going to start advertising. And that's a pretty easy transition. It's more difficult if you're doing a 506C and then you want to do a 506B. You literally have to like shut down your 506C, stop advertising, and have a some sort of cooling off period, like 6 months or 90 days or something, where so it wouldn't be presumed that any investor that came in because of the advertising.
For those of you that are new to Fund Launch or just joined in Miami, again, welcome. 506B, Reg D 506B is an offering for mainly accredited investors. You can raise an unlimited amount of money, but you cannot advertise, and you have to have a pre-existing relationship with your investors, and you're able to the investors are able to self-verify, check a box to verify that they're accredited. For 506C, you can advertise and market your deals, send out to lists and advertisements on Facebook and whatnot. Everybody has to be an accredited investor. However, you have to verify that they are accredited through bank statements or tax returns or a letter from the attorney or accountant, which is a little bit more burdensome. So just a high level separation between the 506B and the 506C. Kelly, can you want to hop on? What do you mean by, what's your question?
Sorry. At one point I was told by an accountant that like that qualified small business election, there are certain things that can kind of like disqualify you, may or may not matter, but I was just curious if anybody knew the answer to that. I mean, an accountant would, I can just ask, but.
And what's your question?
So like QSBS saves you a lot of taxes later. It's like it's like an accounting question. So, I mean, I can ask an accountant, but I was just wondering if anybody knew if the crowd fund, anything in the crowd fund disqualifies from that like tax treatment. So I can ask, I didn't know if anyone knew that, but.
No idea.
Okay. I'll find out and report back.
Jim had a good question. Can I run two funds, one 506B or 506C at the same time with the exact same investment strategy? Marty?
No.
Don't do that.
Yeah,
don't do that, Jim.
The 506C is just, I mean, how do you advertise to some and not to others, right? The SEC is going to presume that anybody that comes in came in because of advertising. So.
Okay, I have another question. How about if we use the exemption like the 3C1, and then for I had qualified purchases to run, what is that, a 3C7 or 9? So, okay, can I run those two at the same time?
So those don't relate to the exemption, right? And I think on previous calls we talked about the silos of regulation that you've got to comply with. So 3C1, 3C7, that's your exemption from the Investment Company Act. So that says, that's what you're using so that you don't have to register as an investment company, whether you're using less than 100 investors or you're only bringing in qualified purchasers. You can, even with that becomes, you can't mix and match those either, because you're going to, say, oh, well, we have 99 investors and then we brought in the rest are qualified purchasers. It has to be all or none on either one.
When I had done this like 7 years ago, I remember that I was only allowed to run one investment strategy, okay, in one fund. You couldn't end up, having multiple funds with the exact same investment strategy. But what happens if we were using one just for, say, accredited investors, and the other one, and this separate fund, okay, with the exact same investment strategy for qualified purchasers? Could I end up running two separate funds like that?
So, technically you can. I mean, you could. The issue you're going to have, though, is that those offerings are going to be integrated, and they're going to say, they're going to look, and the SEC is going to look and say, hey, you're doing essentially the exact same thing. You have the exact same investment strategy. You have, you've just set this up to kind of work around this. That being said, I mean, this isn't, this is free legal advice, so take it for what it's worth. I mean, the likelihood that's going to come up is probably pretty slim. Where it would come up with the regulators is you file your Forms D, and most likely some state regulator would see that and be like, wait, it looks like you're offering two investment funds, and they start digging and they say these are two offerings and they should be integrated. You can't, and I think you'd have to be really careful too, because if you're advertising and they have, they look like the same thing and they, act like the same thing, you're saying, oh no, these investors, even though we advertise, we put them in this fund. That's can be a really hard argument to make.
Yeah.
Thank you.
Gary, do you have a question?
Yeah. Hey, Ryan, you said that you had done a Reg A fund. I guess I'm kind of confused on, would you do a Reg A fund again or a Reg D, and why? What did you like? What did you not like? Or was there a certain reason? I guess I'm trying to understand the whole picture.
Yeah, it's a great question. I probably won't do a Reg CF or a Reg A plus again. I'll probably just work with accredited investors only moving forward. It's just easier. Your $500,000 investor is much easier to work with than your $5,000 investor or $500 investor. That's just my experience, but I know people are doing it successfully. It's an option. For Reg A plus, you just have to be really well funded and staffed, and it's not something you can take shortcuts on. Not that I would take shortcuts anyways. It's just a lot to manage.
It's the investors are really needy. They need a lot of attention, or what was your experience?
No, it's a lot on the back end to. Can you talk briefly about staffing? Yeah, so I mean, it's just a lot to manage, right? It's like, okay, you have an advertisement for a Reg A plus offering, and they go to your landing page and your investments portal, and once they invest the money, well, where does all that go? And you're dealing with escrow agents and broker dealers and transfer agents and managing data and accounting softwares. Then you throw in oil and gas, and everybody's a partner in the fund. So now you're dealing with K1 taxes instead of 1099s, which is a lot more complicated. It just gets complicated. And I think with the Reg D offerings and funds, it's just a lot more simple. I'm trying to keep things more simple for me.
Ryan,
amen to that one. I agree with that. Real quick, sorry, Marty, I didn't mean to step on you. You mentioned the K1s versus 1099s. That I hadn't heard that. So with Reg D, I'm issuing 1099s, not K1s. Is that what you're saying?
No, that's just the specifics for my previous experience. But that's not right. Go ahead, Marty.
Yeah, that's going. Yeah, a 1099 is if you're paying employees or consultants. No, I mean if you have a a fund that's set up as a limited partnership or a limited liability company, you're going to have to issue K1. So that has nothing to do with, that has to do with how you're structured from a tax standpoint. If you set up, one of the reasons why people set up as a REIT is that is actually it's designed as a corporation, and so you would issue a 1099 div, which is you're paying dividends versus having to do a K1. So that can be easier from that perspective. I think that obviously I'm a fan of Reg A. I think it's a really useful tool, but it's got to be for the right party. And I've talked, plenty of people out of doing Reg A's just because it's not, they said, hey, we've got a $5 million fund or a $10 million fund, and we really want to bring in non-accredited and a bunch of non-accredited investors. I just think that you have to be prepared for it, because it's expensive, and you've got a lot of parties you're managing, like Ryan said. I don't know if you need like a full 10-person staff, but you've got to have somebody that's got their eye on it all the time. And if you're trying to go out and make investments, and you're trying to do other things, it can be a lot. And that's, I think, what Ryan went through that experience, because although he had partners, he was primarily the one that was doing everything. And I think that was, it was a lot for him to handle.
That's interesting. Brandon Miller had a great question. I know we're got to wrap up pretty soon. Brandon asked, what's the best way for family and friends to invest in a debt offering?
So I think that, it depends on it depends on the asset that you have. Theoretically, if it's a real estate offering, they could do that under Reg CF. I know that if they're accredited investors, it's easy to do, really easy to do a Reg D offering and just do a debt offering. That's super easy. That's always going to be the simplest way if they're accredited investors. If there's some non-accredited investors, you could do a 506B. But again, you have to provide them with the financial information. But depending on the underlying asset and how it is, I've seen people do, Reg CF for real estate type things. You just have to be careful not to, it doesn't work for funds per se. So you'd have to be creative with that.
Awesome. Is there any other questions?
I got a question if we got a moment.
Yep, absolutely.
Thanks, guys. Really appreciate everything today. So we're launching a mobile home park, turnaround mobile home park fund with a wellness focus. We're giving free wellness to all the tenants. We're keeping it super buttoned up. Black Card's been really helpful. We brought on a MAI and a broker dealer because of you guys. So super grateful for that. But after this first fund, if we'd like to kind of scale this up and do something that is a little bit more public, let the people within the parks or the people that are in our communities invest into this. Would you say that the CF is a solid marketing vehicle? Say we have a strategy that we want people to copy. Like, I want people to go out and steal our strategy and really start taking ownership for their tenants, even in multifamily. There's opportunities. So we're making an ecosystem, like a wellness ecosystem, that can be kind of white labeled by other companies. But would you say the CF is it too much of a headache for us if we don't need it? And should we just work with accredited investors because we can and just move forward and build? Or is it useful for marketing purposes? Like, what was that experience? Because you said you wouldn't do it again, so that was interesting for me. So I was just kind of wondering what your personal opinion would be on that.
Rob, do you want to jump in?
Sure. And Ryan, I mean, I think we should give you your perspective as well. But, James, I think that it can absolutely be a really strong marketing tool. Now, in your use case, the people you're marketing to, are you assuming you're marketing to the owners of the kind of the tenants, or are you thinking about kind of a more broader social mission of, I'm going to get people to invest in this thing to let me go further with what I want to do?
Yeah, more broad. It would be available to them. I don't know how many of them would do it. It wouldn't be we wouldn't target them. It would be available to them as a part of a financial literacy journey, maybe, or something like this.
Sure. I think what I would say is that I've seen a ton of companies be really successful when the Reg CF is on the side of some other raise and it's not important to them how much they raise. Like if you came away with 50 grand, you're like, I'm happy because I got a handful of tenants in and a couple other friends and family and stuff. If you're not relying on it for the capital, it's not particularly expensive or hard to do as long as it takes, as long as you have things buttoned up otherwise. If you're really relying on it to be a significant source of capital, you'll probably need a more kind of robust marketing strategy. And so, I think you'd have to decide if you're already going to get a lot of press and other things around your venture and you just want a way to kind of suck up interest, then Reg CF is great. But if you're hoping the Reg CF by itself will generate interest, that's usually a little bit harder.
So if I understand correctly, you're saying that if we are launching our first fund, we could also do a CF? Is that what you're saying at the same time? That's what you're saying, or?
Well, I think you wouldn't be able to use a Reg CF for the fund itself, but you could theoretically, for anyone here, right? If you're raising a fund, but you're also investing in an operating business. So if we presume that the park is an operating business, you could have people invest in the individual park alongside your fund via Reg CF. So it wouldn't be you wouldn't be raising money for the fund. You'd be raising money for the individual businesses within the fund.
Assets within the fund. Got it. Okay, individual business. Okay.
Rob,
very helpful. Thank you so much.
Rob, do you guys still do side by side like 506C and Reg CF deals?
We don't host the side by sides anymore. We found that there isn't much market for it now that you can raise 5 million. We did that back in the day when you can only raise 1 million. Yeah. But we still are happy to let people do side by sides on their own. We just, as Marty said, you just have to be careful with integration issues. So you want to be very cautious about kind of how you're handling that. But from our perspective, we're not going to stop anyone from doing that.
Great. All right, Brandon. Brandon, your question, and Kelly, your last question with Kelly.
Sorry, so I didn't ask my question good enough for typing it in the chat. So we're not a fund anymore; we're a debt offering. And so now that I've switched to the debt offering, I've had friends and family say, "Can I invest with you now? Do I still have to be accredited?" We did, I guess, fill out our 506C. So I guess does that change at all going just to a debt offering, not the fund structure?
So what is the company, Brandon?
We do factoring. It's DM Capital Group. We buy accounts receivable.
The offering's a note, right?
Correct. So we are selling notes.
So the security that you offer really doesn't affect anything, whether it's a note, whether it's equity, whether it's a whatever, that's kind of irrelevant. But it depends on so if this is our business, we do factoring, we're raising capital so that we can do factoring. I mean, that's probably not considered a fund. I mean, I think on how you're doing that. So in that situation, and Rob may have a different opinion, but I think Reg CF would be a good option for you, as long as you're not classified as a fund, as long as you're,
Yep.
If you're an operating company and what you do is you provide financing for factoring, that to me doesn't sound like you're not investing in securities. You're providing short-term financing. I think you'd have an argument that you're not an investment company and therefore could probably use Reg CF. I don't know. Rob, do you have any other thoughts?
I would tend to agree, Marty. Brandon, was there something else you wanted to add there?
No. So, I mean, I've just got a few friends, family. For the most part, we will target accredited investors. We still have a PPM. It is a debt offering. I don't think we technically need it. I'm just trying to
If
get a little bit of pushback from these people that aren't accredited.
Yeah, if it's just a few people, then, you could, I mean, if you've been doing it kind of depends on if you've been advertising that, do you have a website? If you've been, what have you been doing to spread the word? If you've been doing that, then
These are friends and family that were, no, we've been doing this before we even started the fund or that debt offering. That have kind of been tied with what we're doing.
I guess it depends, what have you been doing for your 506C? Have you advertised that?
Not yet. We're getting to where we will start advertising it.
Okay. So if you haven't done any sort of general solicitation, then what I would do is you basically under a 506B or even a 482, it doesn't sound like there's probably a lot of big dollars that are coming in. You could bring those.
No, it's just appease a few family members and a few friends.
I think you could bring them in as long as you haven't done any advertising. You could bring them in under either, like I said, 506B, or even if it's just a few people, 4A2, which is the sort of the basic non-private offering exemption. Again, as long as you haven't done any sort of advertising of the fund or general solicitation, and then close it out, don't bring any more non-accredited investors in. And then once you start your 506C and have a web page and or direct, whatever you're doing to advertise, just make sure you don't bring in any non-accredited investors after that point.
And guys, I'd like to add a point. This is a really good case.
What complicates that is I did.
Oh, go ahead, Brandon.
Sorry, I did file my Edgar. I did file because we have taken accredited investors' money. Maybe that muddies the water a little bit. Maybe I shouldn't have filed that.
Well, but it more depends on
jump gun and be ready.
Yeah, it more depends on what you've done as far as if you've advertised or not. If you haven't advertised,
no, we haven't advertised.
General solicitation, then
friends and family.
Then then there's nothing that makes it a 506C.
Yeah.
Okay.
Yeah. So I like to add with Brandon.
Your feeling is we're good to take those.
There's a lag. So I like to add, guys, that with Russell and Brandon, and they went through the whole fund launch process. They went through, they got their legal docs and realized that their fund structure wasn't best for their opportunity of what they were offering. They had a 2% management fee, 80-20 split, and a pref and a catch up and all these things that wasn't really applicable to what they were offering. So they went through the whole process and realized this was not for me. So they switched up their offering. And so that's why part of the reason I wanted to present some of these different bodies of regulation is, figure out what it is you're offering, because the typical fund launch structure might not be applicable to you. So I just wanted to share that information with you guys. Kelly, last question.
Yeah, not a question. I just, James was mentioning, is it more complicated? I have so much information on that just based on the friends I have and the people I know who've done the thing. And James, I wanted to talk to you anyways, because our funds are same. So same-ish. And what it's really good for is community and bringing people in, good for buy-in, really good for getting people involved. For my startup, I was considering making it a co-op for that reason. So it's really good for community. The only thing is, it's a ton of marketing just to get the Reg CF to people oftentimes. So it's almost a full-time marketing push just to get the marketing push going. So it's just, if anybody has questions about what other people have gone through, I have some of those stories, but because I'm ready to do my next. That's what I'm here for.
Let's go.
Yeah, I'm ready. I'm excited.
Awesome. All right, guys. Well, hey, Tuesdays, 1 o'clock Eastern time, we're doing these calls again. And yeah, I got kicked off the general chat, so I can only post in the legal compliance section. So that's where the details will be. But Rob, thank you. I'll post Rob's information on the channel. Marty, thanks again, and we'll see you guys next week.
Ryan.
Thanks, everyone.
Thanks, everybody.